Hey everyone, welcome. It is half an hour before the market open on February 21st. And I was looking at the futures a little bit earlier today, not my normal pattern, but today I did have a quick look and it did look like everything was down. So let's see how everything developed over the last few minutes. I guess it's been about maybe half an hour since I took a look. And it shouldn't be any different, but random on Dow and random on the S&P, but significant on the NASDAQ. That is going to be about 60 basis points, so 0.6%. So it's going to be difficult for the NASDAQ to have a positive close today, meaning that it's going to be difficult for us to close higher than yesterday in the NASDAQ. That's not great news for the NASDAQ because we were already right at the EMA 20 or this purple trend line. So if we're opening way down here towards the lows of yesterday, and we're not going to be very likely to close at the close of yesterday today, that means there's a very high chance of us closing below this trend line right here. Now, that is not necessarily the start of a downtrend. It is certainly points towards the start of a downtrend within the QQQ. However, it is possible for us to dip below it and come back up. It hasn't happened during this current uptrend. Let's see if I can find an example. For example, right here. We dipped below that EMA 20 for a couple of days. We came right back up. And the trend continued. So it's not a guarantee that it's a beginning of a downtrend, but it is certainly the first time that it would have happened since the beginning of this uptrend. And that is just another sign of weakness. So it could be the beginning of a new downtrend, or it just could be a sign of continued weakness inside the markets. We don't know that yet, but we certainly want to be protected if we against that event, if we're not already neutral on our portfolios. There's not a lot of stimulus other than NVIDIA, so that's going to play a huge role. If I look at the economic calendar, we have the FOMC minutes being released at about, 12:11 a.m. today. So 2 hours before the end of the markets. So we could see some volatility at that point. But again, I don't expect it to have a large effect directionally because there's unlikely for them to say anything that they haven't already said. And finally, the market has listened to. On our Fed Watch tool, yesterday when we looked at the May, we were between 30 and 40%. We're still there. We're at 35.3%. So there's rationality in the markets. We shouldn't see a huge move based on the economic calendar. So that really just leaves earnings. Our fear and greed index is still in the greed area, but at least it's not in extreme greed anymore. And NVIDIA coming out is going to have a huge effect, or potentially have a huge effect on the market. And if we get a very positive news on NVIDIA, but our QQQ is still down here below that trend line, that's also a very strong sign of weakness within the markets. So we'll want to watch those NVIDIA earnings very carefully. It comes out today after market. And generally that's about 20 minutes after the close. So I don't know if we'll be able to see it in the, actually, sorry, I forgot to tell you guys, I cannot make the afternoon session today. So there will not be a live aftermarket session. I will record a video instead several hours after the close of the market. So don't show up live because I won't be there. It'll just be an empty room. I will record a video, so we will still have the analysis just later on in the day. So by the time I do that video, we should already have seen the effects of the earnings, and we'll have a clearer picture of where we believe this market will head. If I look at the S&P 500, We are still in between the EMA 20 and the EMA 8, where we're opening. We're not opening quite as low as the lows of yesterday, so that's still above the EMA 20. We talked about yesterday the possibility of touching the EMA 20 today, and that's still a distinct possibility. It's not a guarantee, but it is more likely than yesterday, and it wouldn't be too difficult for us to come and touch that EMA 20 today. So again, we're entering a higher risk zone in the S&P 500, and the same with the Dow Jones, the exact same story as the S&P. So if they don't reach the EMA 20, then they'll be significantly stronger than the QQQ. We'll start to see divergence and an emphasis on defensive sectors over the speculative sectors. And we've seen that song and dance back and forth every single week for several weeks now, or maybe even 2 months. But this time it's a little bit different because the QQQ is showing distinct weakness, closing at its EMA 20 yesterday and opening below the EMA 20 today, with low prospects of it closing back up above the EMA 20 today. So what we'll want to see is if those defensive sectors hold up. If they start showing signs of weakness too, then we'll get a more broad market sell-off, and that'll be a much clearer signal that we're going to go for a downtrend. So we can take a look at that, since there's not going to be that much more to look at. We'll look at the VIX, and then we'll look at sectors, individual sectors, and see how they're doing. So VIX is up today, so above the high of yesterday already this morning. Okay, and so that's in the S&P 500. And so if we looked at the S&P 500, where we're set to open in the S&P 500 is not as low as the lows yesterday, but the VIX currently is already above the high of the VIX yesterday. So even though we're not as low, our volatility is higher, which means there's even more uncertainty by the market makers in this market than they had yesterday. And that is continued sign of weakness. And if we had a VIX hedge, it should be doing reasonably well right now. And the VIX hedge that we showed in the videos last week, I actually put on, it's up about 10%. So today it'll be up even more. Okay, so VIX is indicating that there's more volatility, there's more risk, there's more dangers in the markets right now. So overall, the picture really is pushing us towards, it seems pretty likely right now that we're going to get a break of trend. I don't want to call it too soon. I don't want to point my portfolio in that direction yet, but I do want to start getting neutral in my portfolio and start getting those hedges on. Today is pretty much before NVIDIA earnings. This is your last opportunity. And if we really start breaking strongly below the trend line, then I suppose you can wait for it to bounce back up and test the trend line and make a new high above, a lower high above the trend line. And that would be an okay time to reintroduce your hedge, but actually that would be the time to start flipping your portfolio to point downwards. So it's probably not going to be devastating if you don't get your hedge on, or if you get it on a little too late, but you would have to wait a while and you'll lose some time in investment if you do that. So if you haven't hedged your portfolio already, today is a good time to get those hedges on. Now, all we really want to do now is just look at those sectors, especially the more defensive ones, and see if they're showing any signs of weakness. So the more defensive ones would be XLP, XLU. XLE more unrelated to the market, but at least sometimes it's great to remove the correlation. And so we'll take a look at XLE, and then we'll look at XLV, and those will be our four main ones. There's a couple others that are kind of on the edge. For example, I and B are a little bit more middle of the road, but a little bit more towards the defensive, we can take a quick look at those as well. So we'll look at XLP. XLP is doing very well and showing no signs of weakness whatsoever. It's in this nice uptrend right here and above its EMA 20 and above its EMA 8. It had a positive day yesterday, not a negative day. So XLP is looking great. So no dangers from XLP at the moment. XLU is still below most of its moving averages. It is above its EMA 8 and sitting at its EMA 20. XLU, I wouldn't say it's looking good. And it's not looking great either. It looks like it could have some upside, but it's going to face a lot of resistance. So XLU is not looking very good. XLV. XLV is looking amazing. This is a perfect rainbow, very clear uptrend, and no signs of weakness whatsoever. It's not testing its trend line. So if we can, right, not even close to testing its trend line, not even close to its EMA 20, and still above its EMA 8. So XLV is looking very, very strong. If I'm going to have longs inside of this market, or if I'm going to go bullish inside of this market, it would certainly be in XLV and XLP right now. Let's look at XLE. XLE is chopping sideways. Nothing too exciting here. XLI. XLI is looking great as well. It's almost as good as XLV. And then XLB. XLB is looking good, not great. We had a nice upward movement, a pullback, and a consolidation. Now it's breaking out, but we do have resistance at these highs right here. So what we want to see is, does it move up and test those highs and then break out beyond them? It'll probably stall when we get there, especially since we're so far above the EMA 8 right now. We may pull back a little and then go upwards. Of course, we could pull back and then fall through if the S&P and the QQQ drag it down with it. But given that XLI is looking so great and XLV is extremely strong and XLP is very strong as well, XLB is more likely to follow XLI than it is to follow the rest of the S&P 500. So overall, it's not looking super bad. So what that means to me is that if we pull back and we break through this EMA 20, yeah, we might come to the MA 50, but that might be it. I wouldn't really expect it to extend that movement downwards. Although a couple weeks ago, or maybe last week, we were still talking about, hey, if we pull back to this MA 50, that's about a 5% move. That's just a normal pullback. We expect to get 5% moves about 2 to 3 times a year. And then if we go all the way to the MA 200, that's a 10 or 11% move. That is a correction. It's not a bear market, it's just a correction. So based on the sectors, if we break below these trend lines, we're not expecting the correction just yet. It could develop. The situation could change by the time we hit the MA 50. But as of right now, from where we're standing right now, from what we can see, it doesn't look too likely that this is going to develop into a correction. It's just a pullback, a normal pullback to the MA 50. And we would reevaluate. When we get near the MA 50, then we would reevaluate and say, hey, maybe we'll just bounce off of that MA 50. So that is not uncommon at all. So for example, right here, we moved up, we came and we bounced off the MA 50 twice, and then we started bouncing off of the MA 20, and then we broke through the MA 50 here, and then that was the change of trend. So retracing once to the MA 50 is not uncommon. And so we don't need to be super freaked out if we break through this trend line. If you have longer term investments, so ones that are several months, like 6 months or a year or 2 years or more, then this is just noise. The pullback to the MA50 is just noise, and I wouldn't necessarily be taking off positions and pointing my portfolio downwards because we break this trend line. But if you're just shorter term and you're only holding for a month or less, then yeah, it's a good idea to take advantage of that downtrend, that change of trend, if we get it. Okay, I'm not saying that we're going to get it, but so far we're still waiting to see and waiting to confirm, even on QQQ, even though it looks like that we break through, even if we do break through this trend line today and stay down here, we would still wait for the confirmation. At some point, it's going to wave back up, touch that trend line, make a lower high, and at that point, depending on how low we go before we come back up, we may not have had the lower low just yet, unless we count this one as a low, which we could. But then we could technically have that lower low and the lower high, and then we would short-term point our portfolio downwards. That's getting a little ahead of our current situation, although it does look more and more likely that that could happen. But we want to wait for it to happen, not jump ahead of it. So far, we are looking like, at least in the QQQ, we could break this trend line. If we do, the current outlook is that we probably won't get down below the MA50. So that is it for today. I will leave you to prepare and look at hedges if you need to, and then after market video live, but I will record a video, and if you're subscribed, you should see a notification on the channel that the video has been released. Have a wonderful day, and I will see you live tomorrow morning.